I've been receiving many comments from people talking about the crash that is coming, that September is the worst month of the year, that September 17 will be crazy, that I should just sell everything and wait for the crash to happen. Well, today I'm going to explain why I'm not selling for a profit. Instead, I'm buying more, and that upcoming crash does not scare me at all. Hello everyone, welcome back to the channel. If you're new to my channel, please consider subscribing and smashing that like button, since it really helps the channel out with the algorithm. I do want to know and learn even more about your investing strategy, so if you could and would like to, leave a comment down below with it. I have to say that I have heard about a major crash since I started investing. Still, I have been in some corrections and have learned a thing or two from them. But the most important thing to understand before investing and talking about a crash is to basically study past crashes, understand why and what happened, and how they were able to recover from it in the past. I do have to say that correction, crash, dips, however you want to call it, are expected to happen always, as it is kind of healthy for the stock market. First, I'd like to talk about the Great Depression back in the 1930s. Before that, they were having 6 years of excellent growth. As the stock prices rose to unprecedented levels, investing in the stock market came to be seen as an easy way to make money, and even people of ordinary means used much of their disposable income or even mortgaged their homes to buy stocks, while many others used margin. Once stocks started to drop in late 1929, millions of investors panicked and rushed to sell and close their positions, which obviously brought more selling. Stocks prices fell 33% within 2 months or 3 months. Then the US experienced banking panics in which people attempted to withdraw their deposits in cash, and many more things that happened during the time. Then I'd like to talk about the dot-com bubble in the 2000s, which happened because of speculation on internet-based businesses, and there was a huge rise and then fall of technology stocks. The growth of the internet created a buzz among investors who were quick to pour money into startup companies. These companies were able to raise enough money to go public without a business plan, a product, or track records of profits. It sounds kind of familiar, isn't it? Maybe the same of what people were doing with many SPAC mergers last year. Something like Nikola, for example. Then the 2008 crisis, which I think we already know exactly what happened. Mortgage fraud, bank defaults, and all that. But to be honest, I don't think those things will happen again, as the government has taken different measures to prevent it. Loans are harder to get right now, even though many talk about student loans being the next crash in the United States. And to be honest, it could, but I won't try to guess when it will happen. Lastly, the 2020 pandemic crash, which was nuts. It was very scary, as it was a complete different situation, as it happened because of a disease difficult to control and not because of any economic hardship. We didn't know how to react to it, and as a result, stock crashed, the economy crashed, and everyone was really scared. With all that said, I know there is more to the story, but I don't want to make this a boring history video. After we learned all that, I believe there are several things I believe that are happening again. I believe there is a lot of speculation in the stock market right now, for example, a lot of FOMO, and all that is making everything much more complicated, which is why many believe a bubble is forming right now. What happens, in my opinion, is that many people just started investing recently during the pandemic, and obviously all this is kind of new. I was there when I started investing. I was there when the market dropped 10% at the beginning of 2018, and then almost 20% at the end of 2018. Still, 2019 was kind of a constant uptrend. Not constant, as we can see it dropped twice as well, but not that much as 2018. And still, it kept recovering until 2020. Because of the pandemic, it dropped way below the lowest point that it got in 2018. The thing is that it has been a constant run-up since then. The market is actually up 31% since its peak before the pandemic crash, meaning that it is up 92% since the crash in March. I have to say that it was definitely a fast recovery in comparison to previous crashes. Still, what I want to say with this is that many people that just started investing, the only thing that they have seen is stocks going up and up and up. And when the price of the stock that they started investing is dropping, then you start wondering, what are you doing, if it was the right decision to invest in it or not. Because to be honest, in a bull market, everyone is a genius, everyone makes money. But let me tell you guys something very important. It is one thing to read or watch movies or videos of what happened in the past crisis, how people lost money, and think that you are already prepared to invest because you saw how everything recovered with time. But in my opinion, it is a complete different thing when you are the one experiencing that downturn or crash with your money, because even though you already read about this and watched a lot of movies and videos about the past and saw that it recovered with time, you start wondering if maybe this is the time that it will never ever recover. And because it might be the first downturn that you experience, you might want to panic, sell everything and just wait. I have been there. I think everyone experiences that when they start investing. But we gotta understand that price fluctuation makes no difference in the long term unless you are planning to sell in the short term. This is why I invest in the long term and understand that corrections or dips or crash are healthy for the stock market. But the most important thing to learn is that it is impossible to time the market, as it is statistically proven that time in the market has given better return than timing the market. The market cycles, and it is very difficult to guess what is going to happen in the short term, tomorrow or in a week, or to guess when to buy low and sell high. These are market cycles. If you pull out your money today, there are chances that the stock market could just recover and see it going up and up from there after you sold everything. Or it just could keep dropping, but how would you know when to start reinvesting your money back? What if you're reinvested and it continues going down? You will lose more money, as you will most likely prefer to sell and wait for it to buy lower as you did before. But how are you going to know when it is the lowest it can get? That is impossible. Even day traders have said that they buy low and sell high, but it is still impossible to know what is the lowest and the highest point. The other day I was watching Ricky Gutierrez. As he was day trading AMC, he sold for a profit and the stock kept going up. So everyone kept saying that he shouldn't have sold, that he could have made more money, he should have waited, and he explained that basically he had a plan to exit at that point, that it is impossible to know that it was going to go higher. What would happen if he would have waited like everyone wanted to, and the stock dropped and crashed and he lost money because he didn't sell following the plan that he had? People would have told him that he should have sold for a profit earlier. It is what it is. But I think he did the right thing, even though I don't day trade. How are people going to know that the stock is going higher or lower? The short term is not as important. All you should care about is what is going to happen in the next 5 to 10 years from the day that you started investing in that stock. Now, why I don't care if the crash happens and I didn't sell for a profit? First, it is very unlikely that you will be able to sell everything and buy everything back when the market drops, because then the factor of psychology comes in and you could be scared to buy in now, as it has dropped a lot and it could continue dropping. So you never end up buying and end up losing a nice opportunity, because as Peter Lynch said, far more money has been lost by investors preparing for a correction than has been lost in corrections themselves. If you are investing in the long term, then you are almost guaranteed that you are going to make significant money if you're investing in good companies with future potential and not gambling. Even if you only invest in the S&P 500 in the long term, you are going to make money. Look at this chart. If you would have bought here, or here, you would be up big today. Yes, if you would have bought in February 2020, you would have been down massively by April 2020. But look at it now. You would have recovered and been actually up already. keep investing in things that you believe in and work on increasing your income in order to be able to invest more money in the future and have cash on hand to average down if we ever see that crash soon. Don't panic sell because a drop is happening. It is going to happen, but don't sell. Like, for example, don't sell Apple just because it dropped yesterday after the event. Apple does that every single year. That is why you need to study every single company that you invest in and learn about the past of it, at least what has happened in the past 2 to 3 years and how the stock has reacted to it. For example, if you believe the company has potential long term, it is not worth stressing out and selling at the lowest point. The best thing you could do is to just hold it into it or invest more money if you can. Focus on increasing your income to have more cash to invest, and don't focus on timing the market, as you will most likely lose money doing it. Hope you enjoyed the video. Please smash that like button and subscribe, since it really helps the channel out. Also, I have a completely free Discord group chat, which the link for that is down in the description below. Thank you and see you next time.